All right, let's talk about Adaptimmune Therapeutics, ticker ADAP. This stock is fascinating right now because it's at a total crossroads. The chart is showing some seriously explosive bullish momentum, but at the same time, there are some major red flags popping up. Today, we're going to break down the technicals piece by piece to figure out which side, the bulls or the bears, is more likely to win this fight. So right from the get-go, the whole story with ADAP is this incredible conflict. On one hand, you've got a chart that is absolutely screaming with bullish energy, but on the other, you've got these significant warning signs flashing that you just can't ignore. It's a classic battle between pure momentum and some real caution. And just to give you a sense of the scale we're talking about here, check out this number. Over 556 million. That's the number of shares that traded hands in just one day. This is not some quiet, sleepy stock. This thing is a speculative war zone. That kind of volume tells you that big money is paying very close attention, which means the potential for massive moves in either direction is very real. Okay, so first things first, let's unpack the bull case. What is driving all of this excitement? Well, it all revolves around a classic, powerful breakout pattern that really gets technical traders' hearts pumping. And this right here is the main event. The price didn't just crawl higher. It absolutely smashed through a major resistance ceiling at that 14-cent mark. A move like this isn't just market noise. It's a huge signal of a potential shift in psychology, from bearish or neutral to aggressively bullish. But here's the thing that really gets traders excited: the confirmation. You see, a price breakout on its own is interesting, but a breakout on massive volume? Now that's powerful. The spike in volume happened at the exact same time the price broke through that 14-cent level. This tells you it wasn't random buying, it was conviction. It was the market putting serious money behind the move to validate it. And the evidence for the bulls just keeps piling up. The price is trading way above all its key moving averages. You can think of these as the stock's average price over different timeframes. When the current price is above all of them, and they're all pointing up, it's like a doctor giving the uptrend a completely clean bill of health. It confirms the trend is not just happening, it's strong and it's stable. Okay, so the trend is strong, no doubt about it. But remember that catch I mentioned at the beginning? Well, it's time to flip the coin and look at the other side. Because while the price action looks fantastic, the engine's warning lights are starting to flash, and they're suggesting this rally might be running way too hot. First up, we've got the RSI, the Relative Strength Index. The easiest way to think about this is like a speedometer for the stock's price. Anything over 70 is usually considered overbought. Now, ADAP is sitting at 69.24, so it's not officially in the red zone just yet, but it is knocking right on the door, and that suggests the pace of this buying spree might not be sustainable. And then we have its bigger brother, the MFI, or Money Flow Index. Think of it like the RSI, but it also factors in volume, so it gives us a better read on buying pressure. And it's reading a blistering 84.58, which is deep into overbought territory. This is a big signal that even though a ton of money has rushed into the stock, that buying pressure might be getting exhausted, making a pullback much more likely. So what happens when we put all these pieces together? Well, indicators like the MACD and Arun are screaming bullish momentum. The ADX, which measures the trend's strength, is telling us this is a powerful, legit move. But then you have the stochastic RSI, another one of those overbought indicators, and it's also flashing red. The picture is crystal clear. We have a very powerful engine pushing the stock higher, but the temperature gauge is deep in the red. All right, so with this clear conflict between go, go, go momentum and hey, slow down warning signs, the price itself is going to tell us who wins. And to see that, we need to know the key levels, the literal lines in the sand where this battle between bulls and bears is going to get decided. Okay, these are the numbers you're going to want to watch. Think of support as a price floor, where buyers are likely to show up. That first floor is at 13.5 cents. If that floor breaks, the major support, kind of like the basement, is down at 9 cents. On the flip side, resistance is the ceiling, where sellers tend to emerge. The immediate ceiling is at about 21 cents. If we can break through that, it opens the door to that next major resistance zone, between 23 and 35 cents. So now that we have our bottle lines drawn, we can game out the two most likely ways this could play out. Look, this isn't about fortune telling. It's about having a solid plan and letting the price tell us which path it's going to take. It really just boils down to this. In the positive, bullish scenario, the stock needs to hold above that critical support at 13.5 cents. Maybe it chops around a bit, builds some energy, and then punches through that resistance at 21 cents. If that happens, the next technical targets are up in that 23 to 30 cent range and possibly higher. Now, in the negative scenario, that support level fails. A drop below 13.5 cents would almost certainly trigger a correction, sending the price back down to test that major support at 9 cents. So, how might a trader actually play this? Now, based purely on these technicals, here's one potential game plan. You'd watch for a pullback into that 13 to 16 cent zone. That area was the old ceiling, and now you want to see if it becomes the new floor. If it holds, the first target is that recent high of 21 cents. The more optimistic second target would be that 23 to 30 cent resistance zone. And, most importantly, you'd have a stop loss set below that 9 cent major support, just to manage your risk if this whole bullish idea falls apart. And that leaves us right back where we started, with the big question. The bulls are clearly in control of the trend, but those warning signs are undeniable. So is any weakness here a healthy dip buying opportunity, or are we looking at the top of a rally right before a major correction? The answer will be revealed by how the price reacts at those key levels we just talked about. And that's our technical breakdown of ADA.